Good afternoon, Tsupiteros, and welcome again to another edition of Pillow Talks. Before I begin, I'd like to thank one of my sponsors, AAA Equities. If you'd like to trade with a broker that has automated stops and automated breakout orders, do trade with AAA Equities. Okay, so as always, let's start off by analyzing the markets. In the past 1 week, we've seen the market rally off the 6,600 level, and we're now back at the 7,000 level. If you can see the chart here, when the market sort of hesitated here at the 6,900 level, I was thinking like maybe the market was going to peak here at 6,900 and then retest the 6,600 level. But after what happened last Friday, it has invalidated the idea that this market is actually going to trend down. So once again, we are in a sideways trend, and the behavior of the market last Friday has confirmed that we are once again in a sideways trend. I wouldn't be surprised if we climb back up towards maybe the 61.8% retracement level, which is around the 7,100, or even the 75% retracement level, which is at the 7,200 level. I don't expect this market to climb back up to its previous high of 7.4, but so what we will expect right now is something sort of like this, maybe a rally back towards the 7.1 or 7.2 level, followed by maybe a retracement back down. So something like this. Okay, so we are still in a sideways trend. Expect a very erratic and a very confusing market for the next probably 1 or 2 months, as this market will probably have little catalysts in the short term, no? So if the market is gonna trade like this, of course, I think what will be moving still will be the third liners and the basura stocks. So for now, if you're into the blue chips, if you're in the second liners, maybe you just like to trade the ranges of these stocks, and like by buying low and selling high. I wouldn't probably chase this market anymore here at the 7,000 level, as we are approaching overbought conditions already in the short term. But maybe once it pulls back down, maybe I would look to buy into some blue chips and second liners. In the meantime, it's still a basura market. It's still everybody's still in the third line sector, and you might want to still look for opportunities there. So before I continue with my video, I'd like to thank another one of my sponsors, APS Online. If you'd like to trade with a broker that has excellent research, do trade with APS Online. Okay, so what I'm gonna do now is I'm gonna update you on the third line sector, no, or the issues that have been moving in the third line sectors. So I've classified these stocks into 3 categories, and the first category is those that have 38.2% retracement levels. The second category are those that have 50% retracement levels. And the third category is those that have 61.8% retracement levels or higher. Okay, so let me explain each one of those, okay? So, let me close this. So, after that big drop in the last couple of weeks, in the third line sectors, these stocks have now been rebounding for the last few days, and some of them have very shallow rallies, and some of them have had like very big rallies. On one extreme, we have something like APL, which is hardly rallying from its lows, okay, and is behaving quite weak. So I would classify that as a 38.2% retracement stock. And on the other end of the spectrum, we have something like Vulcan, which has even rallied beyond its 100% retracement level, okay, and has made a new high, okay. So of course, the higher that the stock retraces from its lows, the stronger the stock and the more likely that it will continue to trend higher. The shallower the retracement, such as what those stocks that are doing 38.2% retracement levels, the more likely that they will continue to stay low and probably even continue to trend down. Okay, so let's go back to my Excel sheet here. So on those that have 38.2% Fibonacci retracement levels, we have APL, Apple, Abra, Basic, LC, MA, MRC, OPM, OV, SOC, Sun, T, and TBGI. So, for example, APL, okay. So, if I drew a Fibonacci retracement levels here, it hardly even climbed back up towards its 23.6% retracement level, okay, and is consolidating below that level. So for this stock, I would tend to think that it may continue to go down. It is the fact that it is consolidating at its lows, and sellers who wants to sell the stock aren't able to sell it quite high, may indicate that more and more people might start getting impatient and might start to sell down. Okay, it's the same thing with something like Abra. So Abra also is hardly climbing back up towards its 23.6% retracement. You also have stocks like Basic. Okay, Basic is a bit stronger than Abra or APL, but is still trading below its 38.2% Fibonacci retracement. Okay, you have also the oils like OPM and OV, which is obviously quite weak and is hardly retracing back up towards from its lows. Okay, on the second category, we have those that are rallying towards its 50% retracement. We have Altus, Geo, IS, MG, and Pacifica. So for these stocks, so you look at APVI, it just broke out of its 38.2% retracement last Friday and is now approaching its 50% retracement line. You have here GEO, okay, which is, if I plot here its retracement levels, it is trading now very near its 50% retracement line. You have IS, okay, you have IS, which actually rallied back up towards its 50% retracement line a couple of days ago, and it's now trying to climb back up there right now. You have MG and Pacifica, okay, which obviously is also trading very near its 50% retracement line, okay, and here we have here Pacifica, okay, which actually went ahead of the pack and already hit its 50% retracement line and is now dropping back down. There might be some opportunity here in Pacifica. Maybe if it drops back down near its previous low of 4 pesos, you could probably pick it up and maybe it could rally back up from there. Okay, so those are the stocks that are rallying towards its 50% retracement lines. And then finally, you have the strongest stocks, which are doing 61.8% retracements or higher. So we have here ABA, MAH, FA, UPM, and Vulcan. So let's look at each one of them. This is ABA. Okay, so ABA went up to as high as 156 and is now trying to hold its line above 112. We have here MAH, which also rallied back up towards its 61% Fibonacci retracement line. You have here PHA, which is just creeping higher and higher every day, and looks like it's even going to break above its 61.8% retracement level. You have UPM, of course, and Vulcan. Okay, UPM also rallied towards probably its 75% Fibonacci retracement level. And finally, we have here Vulcan, which went beyond its 100% Fibonacci retracement level. Okay, so what's the moral of the story? Well, definitely, if you want to buy into these stocks, you want to at least buy into those stocks that are doing 50 or 61.8% retracement levels. So while I probably will not look to buy them right now because they are sort of like already here, no? They are already trading right here, and they might start they are now approaching their overbought conditions, and they might pull back soon, no? But if they do pull back, I would suggest that you prioritize those stocks that are doing 61.8% retracements or those that are doing 50% retracements. So how about those that are doing 38.2% Fibonacci retracements? I would look to sell into those stocks on the rally if they are currently rallying towards their 23 or 38% Fibonacci retracements. I would look to sell into those stocks and maybe transfer instead to those that are doing 50 and 61.8% Fibonacci retracements. Okay, so that's actually one way to make money in this market, by looking to buy into the dips into those stocks that are strong. Another way to make money into this market is by actually looking for stocks that haven't really moved. And maybe you'd like to try and look into our website, Tsupitero.com. Let me just show you this. And go to Fundamental. Okay, and you'll see here some screeners, no, such as market capitalization. Okay, so if you wanted to find stocks that have the lowest market cap, okay, you can just go to the screener with market capitalization, and you'll see here stocks that have the lowest market caps. We have right now Swift, KPH, FFI, Boulevard, which is suspended right now, and FPI. So of course, all those, if you are looking for a candidate that could, go to, that could hit the roof and become the next Basic, or become the next APL, or become the next Abra, then you might want to check out these stocks that have very low market capitalization. And you might also want to check out those that have the lowest free float market capitalization. So we have here another screener. What is the difference between the market cap and the free float market capitalization screener? Well, the free float market capitalization screener, we multiply the market capitalization with the free float percentages. So if you look at the top low here, we have BH, KPH, GPH, PMPC, and Jazz. Okay, so personally, I'm actually I like Jazz. I have in my personal portfolio LMG. I also have a little bit of my old-time favorite ABG. So there's some ideas that you might want to check out. Those stocks haven't really moved in this basura market, and who knows, they might get to start moving also along with the rest of the group one of these days. So that's it, guys. I hope you learned something from me, and I hope I gave you some ideas on how to make money this coming week. So see you again next week. Bye.